Hello, traders. It's 8:01 a.m. Chicago time on Wednesday, the 27th of November, 2019. This is episode number 1648. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. So this morning, we continue with the beat of the drum higher. The NASDAQ's up about 13 points, up 0.15% settlement to settlement. The DAX is up today, and so is the Euro stocks. The dollar's up 13 cents, trading at 98.30 on the futures, and the ES is up 2 points. It looks like we are slightly risk on. The product that is lagging today is gold. Gold trading $1,461.50, $5.9 lower, 0.4%. It looks to me like the products that are safety products are all lower, and the indices are higher. Bund down 23 cents. So that's where we stand this morning. The theme overall of the current market is, the central banks have done a good job flooding the market with cheap money, but there is a slight. I'm seeing some slight concern by the central bankers that this cheap money is causing excessive risk taking. Of course, the market loves that. It just continues higher and higher and higher. Market's on a runaway tear up into higher prices. Positive risk sentiment, given the limited the hopes for a limited U.S.-China trade deal in the next couple of weeks, and that's it, really. One thing you want to pay attention to is that we do have a holiday tomorrow here in the United States. We have Thanksgiving, and Thanksgiving means that the U.S. markets are going to be closed. Now, they're partially open. I won't be here tomorrow. I will not be here on Friday. My focus is going to be on, I'm actually not going anywhere for Thanksgiving this year, as I'm working on a pretty exciting launch of new service that is forthcoming over the next couple weeks, hopefully. So that's where I stand. I will not be here tomorrow or Friday to do the Trader Bite. I'll be watching the markets. I may trade if I see something worth trading, but I will not be doing a Trader Bite. For those of you who recognize Thanksgiving and are taking the time off, I'm definitely wishing you a great Thanksgiving. Lots of gratitude for your following and your support, and wishing you and yours a happy holiday as the holiday season starts. Looking at the calendar, we have ECB's Kerr at 11:35 a.m. It doesn't. Oh, hang on. No. Correction. We did get GDP growth this morning. Came in at 2.1% versus 1.9%. Expected. The market didn't really respond to that. We had a small push up, and then we've taken all that back. And then we also got durable goods and several other numbers. Initial claims instead of tomorrow came in today. Initial claims came in lower, which is more bullish. We also got core PCE prices, and continuing jobless claims. We do get Chicago PMI today at 8:45 to the public, 8:42 to private subscribers, expecting 47 there. And then we have a key release, personal income, personal spending at 10 Eastern. It's a half hour after the open. Pending home sales as well. And then we have EIA crude oil and gasoline stocks. I'm not seeing, I'm seeing the estimate for crude oil stocks as a draw of 418,000 barrels. And in gasoline, we're seeing a surplus of 1.22 million expected. And that wraps up the day. We do have Beige Book at 2 p.m. today, Fed's Beige Book. That wraps up the day for us. I'm not going to be here for the second half of the session from noon onwards. Do take the time off and kind of regroup and make sure you're relaxed and rest your mind so you can come back and finish out the year strong. It's a good time of year to start looking at considering what your performance has been, what your goals have been, and renew your commitment to, we all need to do this, renew our commitment to more perfect execution, as they say. Here's what was expected yesterday in our review segment. Primary scenario is an immediate push up higher. And then what I was looking for is that 31.45 represented a spike on the Chinese news that was immediately refuted as we went back to the SOC, if you recall, yesterday. And I was looking for that as a strong high. I often talk about weak highs like the one we see here from Monday afternoon. But yesterday's spike into the overnight was an excess high, a strong high, and I expected that the market's not likely to get back up there. Probably pause somewhere around 31.41, 31.40 to turn over and hold steady in the middle. That didn't happen. The second is a take out the weak high and then come back into the prior range and hold steady. Still put in a higher low, higher high. What actually ended up working out is scenario 3. Scenario 3 had a small pullback, impulse up, consolidation, and a grind towards that 31.45. And I was looking for it to push even as high as 31.50. Here's what happened. Yesterday's volume was light at 799,000 versus about a million. Here's the pullback. We get a pullback consolidation and we get the impulse up. This is a nice impulse. You could see a 7-point rotation. And then from there, it just started to creep up towards that 31.45. Yesterday did not fulfill the overnight stat, which is about 97.2% probability, historical probability of the overnight high or the low being touched or taken. And it could not take out 31.45. And that doesn't surprise me. It's a news-based high, and so we didn't quite get there. So that's where we stand. The run-up is interesting because it kept dipping pretty deep into the range, and then it ran into the close. The overall profile looks okay, not quite a standard normal distribution, but we do have the point of control holding steady within the IB. It didn't migrate to the high. But the overall point of control did migrate higher from the prior day with a higher high, higher low. The market is accepting higher value pretty well. And so, with the overnight session coming in and squeezing higher, we're on the same pattern that we've been on for some time. As has been the case for now a week or so. Be careful if you're getting short. So here's the push higher. It had okay volume on the buy side. On the close, it seemed like it had pretty good participation. And then from there, we went sideways on the Asian session. Let me get the scale. On the Asian session, and then right here's when Europe came in, right there. And Europe had an open auction that then pushed into 31.50 and came back off. You could see that the point of control, mid, and VWAP are in the same spot. The overnight session seems quite balanced with a weakish high. It's hard to tell based on other than the key pieces, the boulders in this foundation that we're building on for the day. What we see is the market is able to continue to find buyers that are migrating prices higher, and that's what we have to go on. That's a big piece that governs. And so, unless we see a strong impulse down, really, we want to continue to favor the long side. Here's what the order flow shows. We reopened and we've been kind of grinding upwards. There's some liquidity that's been there since yesterday up here in the 3150 area. No surprise there, mid-century figure, and so it's likely to get some attention. And then I'm interested in this 3151 area. I have a measured move target over there, 3151, 50, 52, and a stock zone, and it has some liquidity sitting up there. I'm interested in that being a point of attraction for the session, a bit of a magnet. So below us, not much till 3139. 3128 is now a pivot point. Really, in terms of the profile, it's got a fair amount of volume in it in the short-term composite, and it's an area that we need to watch out for. I'm expecting that below 3128, which is off the screen somewhere down here, below 3128, we're likely to see the market kind of repair a lot of what's going on back down there. There's from a structural point of view, let me pull up at my master levels. From a structural point of view, we see there's a fair amount here that hasn't really properly auctioned. So if we go back to the screen, we can see that we have a naked point of control plus a gap zone. We have another naked point of control there, another naked point of control there, another gap zone. The MC point of control, if you recall, 30, 39, 50, and then another naked point of control, and so on and so forth as we look below us, 3119. These areas, the naked point of controls and the gap zones, are kind of, we consider that sort of weak structure that did not get a proper auction before we moved on. So let's move on to what we're expecting for today. Today, I don't have very high hopes for movement, but then again, I didn't on Monday and the thing ripped. While I'm at it here, you know what I'm going to do is post this image again to ask you to sign a petition at ft71.com, ft71.com/MCL, all caps. It is case sensitive on the MCL. Please sign that petition. Please sign that petition so we can get the micro crude oil contract moving along from the CME as a product that I'd love to build some content around. I'd love to trade, and I'd love to have on offer for everyone here to have some way to diversify their trading, as crude is more fluid in its movement than the ES, in my opinion. So, what do we have here? So what we're looking at for today, an open auction. We're right up against the overnight point of control. It's a pretty balanced profile. Today, I'm expecting this to take a little bit of a pause, move down into 31.41. Now, the overnight's low is 31.41.75. The high volume node from yesterday plus the peak is at 31.41. I'm expecting that to be tested before the market starts to push again and then hold sideways in this 31.50 area. That's what I'm looking for today, for us to give it a bit of a break, catch our breath a little bit. The secondary is a market that responds quickly down, impulses up, pushes higher, and then continues to walk up before it returns to 31.50 on the close. Not expecting a run today, not expecting a drive of any kind. It may happen. That gives us scenario 3, but those are the two scenarios. I'm looking for it to pull back and set up to push higher into 31.50 for the rest of the session. That's really what I'm looking for to start. Now, if it doesn't do that, that's okay. It's not a big deal. But the better opportunity is a pullback to prior value for a bounce. and attest to that overnight high. So that's how things are shaping up. Good luck today. As I said before, not going to be here tomorrow, not going to be here Friday, but I'll catch you on Monday morning and a new month. Good luck today. Take care.